Russia's economy is teetering on the edge of a crisis, with its growth effectively grinding to a halt, a situation Sberbank CEO German Gref has bluntly labeled as technical stagnation. Speaking at the Eastern Economic Forum, Gref warned that the nation's economic momentum is evaporating, with July and August data hinting at near-zero growth. But here's where it gets controversial. He argues that the central bank's aggressive interest rate hikes, now hovering around 14%, are doing more harm than good. In his view, even this high rate won't spark recovery unless it drops to 12% or lower, a stance that directly challenges the central bank's recent strategy. Could this be the turning point where policymakers finally listen, or are they doubling down on a flawed approach? Let's break it down. The central bank's response to surging inflation, driven largely by military spending, has been nothing short of drastic. They pushed the key interest rate to a 20-year peak of 21% in September 2024, then gradually cut it to 18%, signaling a cautious pivot. Yet with state budgets still bloated from war expenditures, deeper rate cuts remain off the table. This tightrope walk between inflation control and economic stagnation has left many economists scratching their heads. Is the central bank's strategy a necessary sacrifice, or a recipe for disaster? Government officials aren't exactly painting a rosier picture. At the Vladivostok Forum, Economic Development Minister Maxim Reshetnikov admitted the economy is cooling faster than anticipated, with revised 2025 growth forecasts slashed to 1.5% from 2.5%. Finance Minister Anton Silyanov even floated a more dire 1.2% estimate. Meanwhile, the budget deficit has already blown past its annual target, hitting 4.88 trillion rubles, $61.1 billion, in just 7 months. How is this possible? Weaker global oil prices, a stronger ruble, and relentless Ukrainian strikes on Russian energy infrastructure have slashed export revenues. Oil and gas income, for instance, plummeted 36% in August, to 505 billion rubles, $6.2 billion, a record low since mid-2025. And to make matters worse, export restrictions on domestic gasoline have further choked revenue streams. And this is the part most people miss. The real crisis isn't just about numbers, it's about survival. Independent journalism in Russia is under siege. The Moscow Times, a critical voice in the country, has been branded an undesirable organization by the Prosecutor General's office, criminalizing its work and putting its staff at risk. This follows earlier attempts to silence them by labeling them a foreign agent. The authorities claim such reporting discredits leadership, but the truth is, a Moscow Times simply aims to deliver accurate, unbiased coverage. Without outlets like this, who will hold power accountable? Their plea for support isn't just a request, it's a lifeline. Every $2 a month could help protect the last bastions of free press in a region where dissent is increasingly dangerous. Will you stand with them, or let the silence grow louder? Share your thoughts below. Do you think the central bank's rate strategy is the right move, or is it pushing Russia toward an economic meltdown? Let's discuss.